Well, there you go. We're always looking for a day like this, and we got one today. I wanted to go over it kind of in detail about what happened. I think that you'll really enjoy the show today. I think, sometimes pundits, analysts, etc., are unclear as to what took place. There's such clarity today, but it's also a good lesson. It's a good learning experience. So I'm going to take you through it. And if you like this kind of stuff, hit like and subscribe and notify. And I think you're going to find there's good stuff coming up. And then, of course, Patreon, if you can spare the $5, down below, you'll find the Patreon information. You can sign up and participate with the other 110 or so folks that are doing Patreon right now. All right, let's take a look. Let's start here. This is the way I lay out my phone, my stock analysis so that I can see what Tesla is doing in comparison with others of its peers, as well as with the NASDAQ, S&P, and Dow Jones. Now, you might lay yours out in some similar way too, but that's how I do mine. I thought that might be interesting to you. Now, you can see right away, if you look at this, that the NASDAQ was going along okay in the beginning, and then all of a sudden it shot up. And Tesla shot up at the same time, but it shot up even more, all right? The S&P shot up. The Dow didn't shoot up quite as much, but over the day, it did quite well. But the NASDAQ went up a lot. Now, what is it? What do we know that the NASDAQ responds to? Well, the NASDAQ responds to anything that's tech related, but it also responds more heavily to bonds. And if the bond yields go down, then the NASDAQ goes up. And also with Tesla, same thing. So you see here, Tesla at the end of the day was up 7.48, almost to the high of the day. The NASDAQ fell off just a little bit at the end of the day, but it was up 1.69. But you see, like Apple was up 2%, Google up 2%, Amazon up 1.24%. Can't quite see on Meta what that was up. Anyway, so all the tech stocks were up, but Tesla was up dramatically more. Now, then the next question you ask yourself, well, why is that? So here's a little list, all right? Number one, the Dan Ives interview. Dan Ives did a great interview last week. He talked about how Tesla is not an auto stock. It is a data-driven AI stock. It putting in this NVIDIA system, 10,000 chips. Nobody has one anything like it. It's the biggest in the world. They already have Dojo. Dojo's another biggest in the world, going to be even bigger than that. I mean, this is an AI company with a specialization in robotics. That's what Elon is calling it. Dan Ives made the statement, but that was last Thursday. But it really took traction yesterday and today, and you started to see this morning where the street repeated everything that Dan Ives said and brought it to attention. So I believe that was a contributor. Number two, the China numbers came in at 17,000. It's been around 12, 13,000 the last few weeks. All of a sudden it comes in at 17,000 a day. Looks like we might have a record for the month. At the same time in China, BYD beats with 3 times last year's profit for the quarter. Now, that was not quite as good as first quarter, which was 5 times as great. And they're coming off a lower base in terms of their profitability. But in any case, it's showing strength in China. There was also a report saying that China numbers are going to be up about significantly in the third quarter, fourth quarter. And then we had NIO also coming in with a miss, but their guidance was very high. Then people had time to digest the video and the install of the NVIDIA cluster, the 10,000. All of that was talked about on Friday night. It was downplayed by all kinds of headlines over the weekend that were talking about how Elon had to, lunged into the intersection and a near miss and horrible things. And of course, by the time this morning rolled around, people had a chance to see that, in fact, the performance of FSD version 12 is amazing. So all that stuff was playing into the mood of the market. As we opened this morning, Tesla was already up strongly in the first 15, 20 minutes. In fact, if you watched my show this morning, we were like, hey, Tesla's again looking like they're having a good day. So it started out, and then all of a sudden things started to happen. So let's go over here and let's go through it. So the first thing that happened was around 9 o'clock, U.S. job opening. This was reported actually at 9:15. Okay, so this was reported. U.S. job openings fall below 9 million for the first time since March 2021. So we've been in this dire strait with regard to the number of job openings compared to the number of people looking for jobs. Now, falling under 9 million is not like a horror show. This is not like, oh my gosh, there's no jobs out there. Where are people going to find jobs? No, there's only about 1 million people that are actually actively looking for jobs right now. So it's, it's still a huge number of openings compared to the number of people looking. In fact, this number sometimes is inverted, where there are fewer job openings than there are people looking for jobs. So this is still a big number, but the Fed specifically mentioned this. A week ago, when out of Jackson Hole, a Fed chairman, what's wrong with me? I can't think of his name all of a sudden. Anyway, the Fed chairman mentioned specifically the job openings falling. He specifically hit on this item. So we'll show you in a minute where when this came out, the market started to move upward more strongly. All right, then this came out. Where am I here? I need to move myself a little bit so I can see what I'm doing. Whoops, how come it won't move? Well, that's no fun. There we go. So then the next thing that came out was the JOLTS shows stable but cooling jobs market. So the JOLTS, of course, is the number of job openings per unemployed worker. I'm sorry, that's not, so that shows you where it's coming down, okay? And then we also had the layoff rate held at a low 1% for the fourth straight month. So this is like Goldilocks, okay? We also had the quits rate fell to 2.5, well below the recent peak of 3.3. That says that either people are happier in their jobs than they've been, getting paid okay, or it means that they don't see the opportunities out there to be leaping off to the next better job. So that also shows a quieting jobs market, which is what the Fed is looking for. So all that came out. And then finally, at about, I think it was at 9:15, I think it was. Anyway, the U.S. consumer confidence came out. I'm sorry, 10 o'clock. 10 o'clock, the U.S. consumer confidence came out, and there was a pullback in August. So the Conference Board Consumer Confidence Index declined to 106.1, where 100 is the kind of the average you're looking for, from a downwardly revised 114 in July. So consumer confidence was very strong in July, but then this was reduced after it was revised, and now it's down to 106. So this is another situation where the Fed will be going, oh, it isn't horrible. We are not looking at recession here, but it is lower. And so therefore, it's something to pay attention to. So the consumer confidence fell. I'm sorry, there was something else I wanted to tell you about this. So this gives you an idea, a look at the chart to see where it is compared to historically. And this shows you, got down to here below, down to 40 in 2009. It's come all the way back up, and now has been climbing, but you're going to have a little month or two off. A little month off here. So assessments of the present situation dipped in August, on receding optimism around employment conditions. Fewer consumers say jobs are plentiful, and more said jobs are hard to get. Hard data confirmed that employment gains have slowed. Overall wage increases are less generous. Compared to a year ago, an average number of weeks of unemployment is ticking upward. Business conditions in August were little changed from July, but still somewhat lower than in June. So this is what the Fed is looking for. I think there might have been 20.7% of consumers said business conditions were good, unchanged from July. 17.2% said business conditions were bad. That is up from 16.2%. Consumer appraisal of the labor market, 40.3% said jobs were plentiful, down from 43%. 14.1% of consumers said jobs were hard to get, up from 11.3%. And there's your expectations, present situation expectations index. You can see how it's closing together. All right. And then expectations 6 months hence. 16.2% of consumers expect business conditions to improve, down from 17.2%. Meanwhile, 16.8% expect business conditions to worsen, up from 14.5%. And consumers in terms of the short-term labor market, 16.7% expect more jobs to be available, down from 16.6%, but 18% said fewer jobs, way up from 15.6%. 16.5% of consumers expect their incomes to increase, down from 17%. 12.4 expect their incomes will decrease up from 9.9. Okay, so that came out at 10 o'clock, and this came out at 10 o'clock. I'm sorry, that came out at 10 o'clock. Consumer confidence came out at 10 o'clock, and the other one of the jobs reports came out at the same time. And then here's what happened. We're going to skip that one for now. So this is what happened to the bond market when that happened. Okay, we're going along, and right at 9:42, when the first two reports are coming out, you see it's starting to fall. And then look what happens here at exactly 10 o'clock. There you go, 10 o'clock. It falls off a cliff. Okay, so you can see the bonds falling like that is indicating that's the interest rate. That is what you're seeing there. Let's look at the 5-day just to give you the full look at what this looks like over time. You can see what a dramatic drop that was. Okay, that dramatic drop is what caused the stock market to go up dramatically, which we showed you earlier, and what also caused Tesla to go up dramatically. Yes, people were already feeling good about the stock because there's all kinds of good stuff going on. We have the catalysts that are coming up. But if the market had not dropped, if the bond market had not dropped like that, if the stock market had not gone up like that, this is where the macro really comes into play. All right, so then we have this, which is kind of going the other way, but let me show it to you in detail. This is a graph view of housing prices from Case-Shiller. Now, what have I been talking? If you guys listen to this channel, you're going to see exactly what I've been talking about. This is a one-year graph. You can see, unfortunately, let's see if I can brighten this up. I think, yeah, there we go. That looks much better. Okay, so this is a one-year graph, and you can see that we've basically, I got to move myself again. I'm still in the way. We've had the overall price of housing, this is owned housing, is still down 0.2% compared to last year. It went down over the winter, came back up in the spring and summer, and it's still going up now. It might even go into positive territory, and then it'll be winter again, and then it'll go down again. This is how the housing market works. I've been involved in the housing market now for about 15 years with multiple clients. I've helped write 2 books on the real estate market. I know a lot about real estate. You know this already anyway. Of course, housing prices go down in winter and pop up in spring and summer. This is obvious. Okay, so, but what about, so that is what we got this morning. That is not going to hurt the overall PCE reading on Thursday, and it's also not going to hurt the CPI reading next month. So now the market really believes that there's not going to be an increase in interest rates from the Fed the rest of the year, and that we might even be looking at some decreases. So what are we facing tomorrow? Now, so, okay, we ended very near the highs. There was a little tiny sell-off at the end on the NASDAQ. Tesla was almost at its high at the end of the day. In fact, let me do just a quick check for fun to see what happened after hours, and Tesla is up a tiny bit after hours, 0.02%. What can happen tomorrow? So normally, if you end on the highs, it means that you're going to have the momentum to keep going in the morning. Now, of course, there can be news overnight. Of course, it could be good news or bad news, and so you could have a very different morning tomorrow morning than you have going into the night. But right now, most of the time that you end on the highs, it means the momentum is there to carry you to continue the market climb tomorrow morning. That would be true for the market and for Tesla. What are we facing in the morning? Now, these will be items that are coming out before. Yes, these are all coming out, except for pending home sales. All of those are coming out before the market opens tomorrow morning. So we'll have a chance to report on them tomorrow morning at roughly 7:10 California time is when you can hear my reporting. Okay, so we have ADP employment. Now, ADP employment is not as important as the employment figures that are coming on Friday, okay? So on Friday, that's going to be the one that could, again, hurt the market. But if ADP deployment came in at 324 again, like it did last time, that killed the market, okay? It's not going to come in at 324. It might even come in at the 200,000 that's being suggested. Here's the suggested number. The street believes the number is going to be around that. If it comes in lower than that, that'll be a good for the Fed. If it comes in higher than that, but if it comes in a lot higher, again, it doesn't have to be 324. If it came in at 275 or 290, you could have that would be a setback. Okay. Now the GDP revision, The street doesn't think there will be any revision. This was the number that was given to us last month. They're saying that it'll stay at 2.4. We'll see if it stays at 2.4, but I don't think if it dropped to 2.3 or went up to 2.5, I don't think it's really going to change anything very much. Now, if it's dramatic and it goes up to 2.8 or something, that could be a little bit of a setback, a tiny one. If it dropped to 2 points, no, I think that would probably overall be a bad news is good news, because it wouldn't be enough of a drop to hurt the idea that the economy is doing well, but it would be good enough for the Fed to say, oh, one more evidence that we're okay. Then we have the trade balance in goods, trade balance in inventories. I'm sorry, advanced retail inventories, advanced wholesale inventories. Those, there's no recommendation from the street as to where these are going to be. What you're looking for is you'd like to see inventories starting to drop so that manufacturers have something to make. And that would be a good thing. And again, I don't think it'll affect the market. If advanced retail inventories went up a lot, then that was a pretty good increase last month. Retail inventories going up. If it goes up a lot, that could start to be a worry about the economy. If they go down, they go to zero or they go negative, that could be a good sign unless they went down a ton. But in general, it'd be good. Manufacturers need work, so that would be good. And then pending home sales, we won't be able to talk about that until Wednesday morning. Till Thursday morning, I'm sorry, because that comes in too late for my show. But you can see pending home sales is expected to drop. Because why? Because there's no inventory. Okay, we already know that. And of course, on Thursday, we get the personal income, we get all the PCE stuff. Okay, we'll talk about that a lot tomorrow morning. And of course, Thursday morning, we'll really be talking about it. All right, so that's where everything went today. That's the explanation for what took place. Looking like we could have a really good week. And what might Tesla do in all of this? I've already said it. I'll say it again. If the PCE number comes in strong, and if the jobs numbers on Friday don't kill it, and if there's no other stupid news, ridiculous, crazy, unfortunate news, Tesla is going to go back and test 300. Now, will that be Monday? That was my earliest possible day. I said, hey, it could happen as early as next Monday. I don't think it'll happen Monday. It could happen Monday. That's the earliest. It could happen someday next week, again, barring any bad news. If we get some good news, like announcements about Highlander, announcements about the Cybertruck, or some other good news coming out of Tesla, then those would all be potential reasons why the stock could even go through 300, although I'm still expecting it to be really blocked at around 307, 310, somewhere around there, even if there's really good news. Now, if there's incredible news, so to me, the incredible news would be a Cybertruck announcement with price and specs, and the price and specs are as expected, or a Highland announcement which includes the price, and it's going to be $27,000 in China and $32,000 in the United States. If one of those kind of things comes out, yeah, we could be on our way towards the 350 mark. Am I expecting any of that next week? No, I don't know. Do you know? I have no idea. I do expect that by the end of next week, we should be hearing about the Cybertruck handover. Barring surprises and shocks, we need to hear about it by the end of next week in order to have it take place before the end of September. And pretty much everybody's in agreement that that is probably what the goal is. All right. That's all I've got for you right now. So I guess I'll say goodbye. Like, subscribe, hit notify. Got a couple of great ones coming up with Brian, maybe one later today, one on Thursday. You're going to like Brian White. I know I got to always make sure, is it Brian White or Brian Wong? Both of them are also BW. Do you notice that? You can't even do it that way. Or Brian W. Doesn't work. Okay. Yeah. So hit notify. And then, of course, would love to have about 14 of you join Patreon. We had another one today, another big help, big help. Please join Patreon, get your free book. Okay, I think that's all. We need to close it up. So it's been great talking to you.